morning. Today is Sunday, 28th December 2014. Now in this video, I'll try just to answer a question. A lot of people, they ask me, is trading stocks a normal job? Okay? This idea of a normal job is always there in the minds of beginners. So when they ask me the question, how much you make in a week, how much you make in a month, how much you make in a year, okay? They think that it's like a normal job. You work, let's say, 40 hours a week, like a normal job, and in each hour you get an hourly rate or salary or whatever, and you know what you will make in a month. Now in trading it is not, okay? It is not. You will never know how much you make, even if you have estimate, but you can't, because you are dealing with the market and the markets change. You can work 1 hour, okay? 1 hour. You buy a stock today, tomorrow there's a gap up, like what happened to me with Facebook. I just bought it today, tomorrow I get $7,500, okay? Now it's just less than 1 hour work, so it's not a normal job. You can have too much money and you can lose some money, so the performance is unpredictable, okay? So if you are looking for a job with hourly rate, it means you want just to know how much you make in a week or a month. Trading is not for you, believe me, okay? So if you want risk, okay, that's why you do business. Business is always, you do more risk than someone who has not done any risk, okay? Hourly rate or salary or something, you know what you are making. If you work these hours, you know your money. It doesn't change, except when, let's say, in a year, for example, you get let's say you get a raise, but you will never be sure, because sometimes they will cut your hours, or they will fire you, or something happened to you, you can't work. So everything is has something to do with the time. When you have a normal job, you have an idea. For example, you are making, let's say you are making $2,000 a month. So this is what you get, okay? When you work in that job 40 hours a week, 4 weeks, you work all of them, you get 2,000. It doesn't change, okay? At least in the whole year, before you get a raise or before you change position or wherever, okay? So you know exactly how much you can make, okay? But in trading, you can't, okay? Sometimes you have a row of losses. You can lose money in a month or in a week, but in other months you can have too much money and it is more than you expected, okay? So here in this video, I will try just to make it sure that you understand what you are doing. If you are searching for certainty, you are searching to be sure to get some money. If you are searching for strategy that works 100%, if you are searching for something that it is working 100%, all these things, it means that trading is not for you. Believe me. When you like risk, you like business, you like to risk your money and to risk some of your time in order to make money. If you have this, what does it mean? It means you will be able to trade stocks, okay? Because it's a risky business, but with this risk you can have a good reward. Okay, So it's not as you expect. If you are planning to have a job with 40 hours a week, okay, and you have certain amount that you live with, this is a normal job that everybody do it. But when you go to a business, trading business or any other kind of business, it's not the same, because you have risk. You risk more. That's why some businesses when they succeed, they have more and more and more money. Okay? For example, let's give you an example of Mark Zuckerberg with Facebook. They begin with 1800. Okay? Some of his friends, they give him 1800, and they begin with $1,800 for a startup, for a business, for Facebook. Okay? At first it was just a game to do software, okay, and to do website and to see pictures of friends and at the college or university. But after a few years, how much money this Mark Zuckerberg has right now? Okay? He has billions of dollars. Now this is a business. Okay? If you work as an engineer in a company, you would never have billions of dollars in a few years. Never. Why? Because you are doing a job. A normal job is not a business job. Okay? It means business is totally different from a job. You, for example, you like to have a job 40 hours, you have some money, you don't want to travel, you don't want just to go to your job, you know how much you get paid, you work the job, you get paid, and you establish your life and your expenses on this kind of job. Okay? So you don't risk that much in your life. But suppose that someone who has $10,000, $20,000, $50,000, $100,000 or 200 or more, and he go to the market and he works so hard, and he has to risk all his money in the market, and then let's say he succeeds or she succeeds in making money from the market. So are you the same? No. Someone is risking more of his time, of uncertainty, of risk, of not sure what will happen in the future. Everything he doesn't know. But the only thing he knows that if he succeeds, he can make too much money that if you have a job, you would never make. Okay? So the whole year working, let's say you have 2,000 or something, you get 25,000 or 30,000 the whole year working. But some traders who have a good capital, they can have this 25,000 in a week or 2 or 3 or 1 month. Okay? Why? Because they risk, they do business, but you are not doing business. Okay? So, and the bigger the business, and the bigger is the money, and the bigger is the risk. Always understand that there is a risk, a big risk. Okay? So, this is just to make sure that you understand that a normal job is not like a business. So, trading is risky. Okay? It's risky, you risk your money, and you need a lot of things to do. You need to protect your money. Now for you, when you work, okay, you get a paycheck. You don't have to protect your money. It's in the bank. You don't protect it. Okay, it's protected. But when you put your money in a business, in stocks, they are not protected, and no one will protect your money except you. You should do the job. There is no one else. If you buy a stock and tomorrow the market is against you, you are wrong. Who will protect you from short sellers? Short sellers, or someone who is selling off, is a person who is selling off. He has millions of shares and he wants to get rid of the stock tomorrow. He doesn't want to stay until the stock goes down and down and down and he loses his profit. Understand that these mutual funds, they buy the stock last year or the other year, or 5 years ago, and he made too much money from this stock. So he wants to exit this stock because he made too much money in order to replace it with another stock. So he is serious. He has 10 million shares. He wants to sell it tomorrow. It's tomorrow. And the stock is like, it's $50. Tomorrow when he sells, it becomes $30. So for you, if you stay, you get crushed by this manager. He crushes you and he crushes everyone else because he is selling and he wants his money back in his account, into a mutual fund account. Okay? This happens with a hedge fund manager. Hedge fund manager is a successful trader who the wealthy and the rich, they give him money to trade. Now, he can go long in some stocks, but he can short also. Now, when he short a stock, he will kill it. Okay? He will kill the stock. The stock is $50. If he can make it 40, 30, 20, he do. He does what he wants to do, and the more it goes down, the more he makes money. The more so there is what we call conflict of interest. You think that the stock tomorrow will go down a little bit and go up, but for this guy who is a hedge fund, you don't know him, and he is killing this stock, and he is making a mess to this company by shorting the stock, and all there is a chaos, like in the news. Oh, this stock is there is big guys who are selling, they don't know what's going on. The only thing they see is the stock is going down, and going down too fast, because you see CNN, CNBC, all the news, they like to make this kind of news. Oh, this company is bankrupt. Oh, this company has big problem, lawsuits, I don't know, it's a lot of trouble to this company. Okay, so but the result, what is it? If you own this stock, what will happen to you? Even if you buy it yesterday or the other day or last week or last month, what will happen to you? You lose everything. You lose 10%, 20, 30, 40% or 50% of your money. And then you stay 1 month, 2, 3, 4, or 1 year or 2 or 3. The stock doesn't go up that much in order to recover your money. Because when you lose too much money, what are you thinking about? You are thinking just the stock will go up to your money and then you exit. This is a naive idea that all the beginners have. I have this idea before when I was a beginner. Okay, when the stock goes down, I didn't put stop loss at the time. So I read in the books that the stocks go down, but it can go up again, and you recover your loss and you make money. But sometimes the stock when it goes down, it will never go up, man, and your money is taken by someone else, and he goes to the west. He goes to the west. It means that you will never catch him. Okay, it's over for you. So when you lose, there is no insurance that covers your money back. So this idea of waiting the stock until it comes back again to where you bought it, this is a naive idea. This is an idea of a beginner who doesn't understand what's going on in the market. The market is big fish eats a small fish. That's it. You are a small fish. If you can't, it's like when you go into a cage, like in MMA, which is a mixed martial arts. There is one who is a champion in martial arts, and you enter into the cage to fight him. You have no chance. Okay, you have no chance to win because he is more prepared, he has more power, more strength, and more skills than you are, and he will beat you. Okay, so it's better to have what we call a white flag. White flag, you surrender. Okay, I can't find, I exit. So when I see someone who is a hedge fund, he's killing the stock in the morning, or if I put stop loss, I get out. Okay, I get out with a small loss. But if you stay, he will crush you because you are fighting against him. How can you fight someone who has billions of dollars and he's shorting the stock? How? So this is a naive idea, and that's why most of the beginners have what we call big losses. If you have only one big loss in the year, it will kill every profit that you have, and it will take from your profit. That's why you can't make the money. And you are always, the beginners ask me, oh Kareem, why I don't make money in the market? I say, first, do you use stop loss? Oh no, stop loss doesn't work. When I put stop loss, the market makers and the other guys, they see my my order, they hit it, and I'm out, and then the stock will go up. This naive idea. Understand that market makers in Nasdaq or the specialist in New York Exchange, he doesn't care about your stop loss. If you know how to use it, most of the time you will not get hit. Okay? But if you don't know where to put it or how to use it, okay? So that's why you exist a lot. Okay? This is a skill you should learn. No one will give it for free online and he show you how to put stop loss for free. Okay? Excuse me. This is just to make sure you understand all this stuff. So, going back to our subject, which is trading stock a normal job? No, it is not. You can work only 1 hour and you can have thousands of dollars tomorrow. You can. But in a job. Okay? Let's say in each week you have $500 for 40 hours. You work. That's it. It's exact thing. You work 40 hours, you get $500. 40 hours. Okay? Then you go to your account. You buy a stock today. Tomorrow, there is a gap up. Let's say the stock was $10. Tomorrow is $20 or $30. And then you see $2,000, $3,000 in your account. You say, how can I work 40 hours and I get $500? And I have worked only 1 hour, I get $2,000, $3,000. This is because you are doing business. That's why there is a big difference between business and a normal job. In business, you have more risk. You risk your time, you risk your future, you risk your money, but the reward will be big because if you succeed, you can make too much money. And this is what all the traders, what all the investors want. They want to have too much money in order to have time for themselves. Okay, when you have time, when you have money, you can travel, you can work the hours that you like. You can change from stocks, you go to forex, you go to commodities, you go to futures or options. You have the ability to do whatever you want because you know how to trade. But if you have a job, you get stuck in this job all your life because it's the whole life that you are doing this job. Okay? And you are working for a businessman. Okay? So the businessman hires you to work the job that he doesn't want to do because he's thinking about using it to make more money. So that's why he hires you. Okay? So hope this idea of trading stocks and a normal job is clear in your mind. If you have more questions or you have some inquiries or something, you can comment here in this video, or you can send me a private message, or you can subscribe if you don't. Thank you very much and have a nice day.